Steve Forbes joins us this Monday morning. All right, first of all, Steve, look at this from the Wall Street Journal. Group of economists get together and they say inflation is going to last for years. Got some numbers on the screen. What do you say? Is inflation here to stay?
Inflation's here for a while. We're getting the whirlwind of what was done last year and the year before. Even before COVID, Stuart, the Fed was printing too much money. They went on a binge last year, perhaps for understandable reasons, but they overdid it. And then I think everyone's underestimated the huge disruptions, supply chains disruption when you shut down the global economy. It's not like a light switch. But I think some people at the Fed, even if the chairman remains happily oblivious, are beginning to realize, Stuart, the party is over. This year, the Fed has not created new money. Yes, they're buying $120 billion of bonds each month, but they're sterilizing it. They're withdrawing it from the banking system through a device called reverse repos, which just means they're borrowing the money. So it's like taking a bucket of water, pouring it at one end of the pool, then going to the other end and taking the water out. So there's a device called reverse repos, which just means short-term borrowings. In recent months, Stuart, that has gone up $800 billion, from zero to $800 billion. The Fed, I think, is realizing bad things are coming, and they're trying to find desperate ways to stem the leaks in the dam. But with all those spending bills coming through, if they go through, watch out, the dam will break.
What would be the best form of stimulus now? If you think we need stimulus, what's the best kind?
The traditional kind. No new taxes, no new spending, no new entitlements, no increasing the power and the intrusiveness of the IRS, and the Fed behaving itself. That would stimulate the economy, but this crowd in Washington doesn't get it at all. They want to do just the opposite, hurt the economy while we have these huge disruptions coming from bad monetary policy and what happened last year.
All right, Steve, if we do get a whole lot of new stimulus, if the Congress goes out and spends another $3 or $4 trillion, whatever it is, what happens?
What happens is you're going to get more rising prices. You're going to get the kind of inflation, Stuart, that afflicted us in the 1970s. Interest rates will go up whether the Federal Reserve likes it or not. It'll be overwhelmed by the markets. And that's going to lead to huge political problems, not to mention national security problems. It's bad for the world to have the U.S. seen as an economy that can't manage itself, that seems to be going down instead of up. And if it goes up, it's for all the wrong reasons, printing too much money. So, yeah, the consequences are going to be ugly. And I hope some way Congress gets some backbone and stops this stuff before it gets worse.
We live in hope, Steve.
Yes.
Mr. Forbes, thanks for joining us. We'll see you again real soon.